Welcome back to a quick Nifty update. I have already posted a video of why I exited over this candle. There was a trend line break, and it was suggesting that it could be a short term top in place. So then I exited all of my calls, and I've booked around around 18, 20 lakhs in that trade. And I'd like to share that the video of that the link of that video into the description. You can watch it, and let's get ahead into this video. So um yeah so this rise looks phenomenal, and this rise is actually impulsive in nature, but we have got this one day dip, and there's also red closing over here. So the daily closing is red. That just defines that this entire trend is now over. Maybe we dip a little bit, and then from there we head higher. So what are the levels that I'm looking at if we dip tomorrow? So a 38% retracement comes in around 24,260. That's roughly 80-90 points lower from here. If it wants to go lower, then probably it would take support over here. And then you have this entire range of this gap from 24,177 to 24,260. This is the actual range that I'm talking about. Okay. So if market comes into this kind of zone, then I'll be looking to buy this. But right now I'm not really inclined at buying weekly options. Everybody knows that I do not buy weekly options. All I buy is monthly options. So yeah, if it dips over here, then there's a good chance of it going higher. And let me plot that for you. So this is the possibility that I'm looking at. That doesn't mean that I'm bearish on the market. That just means that if it comes down, then I'll buy it, right? I'm not telling that market is going to come down another 100 points. That's just a possibility that I'm talking about. If it happens, then what is the kind of action that I'm going to take? That is what I'm describing to you. So if it comes into this range of 24,180 to 24,260, then the risk to reward for bulls is would be extremely good, and the PCR levels would obviously would have cooled off a lot. So at these highs, PCR was at a staggering 1.7, 1.75. It has cooled off a bit. Maybe it goes down further, then it would just calm down. It would just calm the entire market down, and then from there we could really start to look at some impulsive moves. So this is going to be by buying range, and obviously I'm going to change my view if we go below this line. Okay, let me plot that for you, and the level is 23,829. So that is the stop loss. That is not the stop loss for my trade, but that is the stop loss for my view, for my bullish view. If it crosses, then I would really have to count this entire structure in a very different way, and I would not be very happy if that happens, because I am quite bullish on the market. So I am anticipating that there's a 80-85% chance, looking at this structure, that we are not going below 23,800. And if we are not going to do that, then there's a chance that we are going to head higher from here. If it comes down to this level, I'm going to buy. There's a trend line support over here as well. So let's see what the market does. If it comes over here around 24,200, and if it starts to form some kind of bullish candles, and in a couple of days it starts to go above 24,500, then note down the next level that we are going to see in Nifty is roughly 25,000. I think that was it for the video. Maybe I'll share INR as well. So INR looks as if it doesn't really want to go up from here. Okay, so maybe if I plot some trend lines, this is some real trend that had that is I think it's quite over right now. So And this entire move, I have to label this what as maybe as an A wave, this as a B wave, and this as wave C. And the probabilistic outcome that I'm looking at is after this WNX, I see USD INR going towards at least at least towards 92.7, roughly 2 rupees lower from here. So that would just be very beneficial. That would be considered a bullish sign for Indian markets. Thank you.